Well, howdy there, folks, and welcome into today's video. Today, we're going to talk about, why they are collapsing the stock market, essentially. And I know, I'm sure a lot of people watching this video right now, you're like, why is this happening, right? Like, I'm not selling stocks. Like, why does the market just keep going down? Why is this stock down 50%, 60%, 70%, 80%? And, two things I'm not going to even talk about in this video today. One is inflation. The second is the Fed. And not because those things are not important, because they absolutely are a very, very important part of this whole story. The reason I'm not going to talk about those two things in this video is because I talk about those a lot, and mainstream media talks about that, financial media, they talk about that all the time as well. Like, watch, mainstream financial media, the amount of times you're going to hear the word inflation and the Fed in a matter of a 2-hour span is going to be off the charts. And so I always feel like what I can bring to the table for you guys is things that are not being looked at, things that are, let's call it just kind of going on the DL that people aren't talking about that are actually extremely important. And so I'm going to show you guys some stuff in this video that's going to absolutely blow your mind, that you're going to be like, okay, this is all starting to make sense why they've been tanking this thing, essentially. So yeah, I hope you guys enjoy this. As always, we'll get started looking at the NASDAQ here for just a moment. Also, if you want some free crypto, check out FTX US. That is my official crypto partner of the channel. 24/7 customer support, 85% lower fees than competitors, and get a free coin with your first $10 traded. Use my referral code Holy Smokas. Okay, so the NASDAQ. It's been in a kind of a devastating place since November, and I thought I would just start out by just kind of showing you guys this chart here, because I think when you see it on a bigger basis like this, you just realize like how steep the drop off has been. By the way, in the past 1 year now, the NASDAQ's down over 12%. It's down close to 24% from its peak now. The Russell in the past 5 years is up 33%. So 33% on a 5-year span for the Russell is actually very, very poor performance. Russell 2000 small cap stocks. That's extremely poor performance actually for the Russell, okay? So where I actually want to start out with today's video is Google Trends. And if you've been watching my channel for a while now, you know I always say Google Trends is your friend. And the reason I say this is because you can get some really good insights on many various things that ultimately end up actually dictating where a stock price goes. And if certain trends go certain ways, it's usually very, very good for a stock price. And if certain trends go the wrong way, it's very, very bad for stock price or stock prices in general, okay? This first thing is extremely important for everybody that's in the market to understand what's going on here, okay? So what you're looking at here is the Google Trends for margin call. All right. Now, I want to give somebody credit from my private stock group who actually posted this in the in the Discord chat, and this is pretty insane. Okay, so if you look at this is a history of going back, from the margin call all the way back to 2004 when Google started tracking this, and what we're going to find is right now, literally right now in the past month, the term margin call is the highest it's ever been in history. Okay, the only time it was higher was when a movie named Margin Call came out in October, November of essentially 2011. Okay, by the way, if you've never seen the movie Margin Call and you're really into financial related things, watch the movie Margin Call. Good acting, good movie overall. Touches on the 2008 obviously financial crisis we had, and really good movie. But essentially, this is right now the time period we're going through. This is the highest we've ever had Google, people searching margin call, essentially, like they're getting margin called, right? Rona crash, we weren't even remotely close to this. 2008, 2009 class is a joke compared to right now. What this shows you is there's massive amounts of likely retail investors getting margin calls, and they've never gotten a margin call before, and all of a sudden they're like, crap, what the heck is this margin call my brokerage just sent me, because you get that email and it says you got a margin call, and you need to deposit $3,000, $5,000, $10,000, $1,000, whatever it is, into your account, or they're at liberty to sell your position usually within, I think it's a 3-day span or 5-day span, and obviously it's different depending upon different brokerages. So right now we're going through a time period where retail has had to just continue to sell stocks because they're getting margin called, and that's just vicious. And I've seen it play out, and I've seen the comments, and I've seen Discord chats and forums and things like that where people have just gotten margin called up the the past month or two, and we're in a situation where a lot of people are selling stocks, not because they want to sell stocks, sometimes not even because they're scared, just because literally they're getting margin called. And so the problem with this is, if somebody gets a margin call and they have to sell a stock, then the next person gets a margin call and they got to sell a stock, right? And so you get this vicious cycle of people just getting margin called and margin calls, and this guy's margin call forces another guy's margin call, right? And it gets very, very ugly very, very quickly. Now, the one good news in this whole scenario is the amount of money on margin is starting to come down. So we peaked actually in October of 2021, and ever since then we've been coming down for the amount of money on margin, essentially. I would guess when the April numbers come out, we'll be somewhere around 755 billion to maybe 695 billion on margin. That's my guess. Where we'll be at. I wouldn't be surprised at all if May drops as well in terms of how much money people have on margin. We're in that sort of market right now where people are either consciously making an effort to get out of margin because they've been torn up so bad, or they're in a situation where they're just getting absolutely margin called right now and they're forced to sell stocks at bad prices, okay? So that's first reason. Margin calls are eating up the stock market right now, and the smaller the cap stock it is, the more it's gotten hit, essentially. And that's why you see some of these stocks, it's like, where's the bottom? It's like, who's even selling these stocks at this point in time? You got a margin call, you got no choice. You're selling that stock, okay? So I want to talk about Nvidia here. Now, why do I want to talk about Nvidia very specifically out of so many different stocks I could talk about in the market, right? For this example, I think Nvidia is a great example, okay? And the reason being is, we all know Nvidia is a great company. Everybody knows that. Everybody knows that Nvidia is likely going to have a much better 10 years from now. You know, it'd be a much bigger name and a much better company and a much bigger company 10 years from now than it is today. Everybody watching this and knows anything about Nvidia should know that, right? But what is going on with Nvidia right now is very, very important, and this is why a lot of stocks are getting destroyed right now. So Nvidia, this stock is down almost 35% in the past 1 month. 35%, right? The S&P 500, the NASDAQ, the Russell, all those are down quite a bit in the past 1 month, but they aren't down 35%, okay? Meanwhile, Nvidia they haven't come out with earnings in the past month, but yet the stock has just gotten absolutely obliterated, right? So what is going on here with Nvidia, okay? Well, first thing you got to understand is the cloud market, right? And cloud is a huge business for Nvidia. Huge business for Nvidia. And they essentially sell into the cloud providers. So think about Amazon Web Services and the other, big cloud companies. Essentially they're a customer of Nvidia, all right? And so who's the biggest player in that market? AWS, Amazon Web Services. They're the biggest player in cloud, right? Well, Amazon Web Services, this is going from a story of growth to now shrinking of growth, essentially. And so if you look at the year-over-year growth of Amazon Web Services, we were up and up and up and up, and now we are starting to go down, right? 37% growth in Q1. Amazon just reported for Amazon Web Services, 37% growth. So that's a slowing of growth. So now the story for cloud is that growth is starting to slow. If growth is starting to slow, investors look at a stock like Nvidia and they say, that's not good. That's not good, okay? And so you have that play out. Simultaneously, and we've had many publications over the past month come out and post this, GPU prices have been coming down over the past month or so, and they're down significantly from last year, which means demand's likely coming down, right? And this is obviously a situation we've seen with even a stock like I own, which is Corsair Gaming, CRSR. We've seen this play out, and Corsair, they don't make GPUs, but they make almost everything else that goes along with gaming, right? And so this is something that's going on. You see this from every publication out there. Things aren't back to normal yet, but GPU prices are steadily falling, okay? This means demand is just slowly kind of tapering off when it comes to GPUs, and that's kind of what's going on now. You could say, well, maybe Nvidia is just trying to produce a ton. No, Nvidia wants to make as much money as possible on these products, essentially, okay? So they're not going to go out of their way to flood the market with GPUs. That's not how this works. Nvidia is very, very smart about their business, and they would rather have supply and demand be a little out of whack and the demand overwhelming from what their supply is, so they can get max pricing for that, right? So The story around cloud for Nvidia, it's getting a little worse now. The growth rates are starting to come down. The story around gaming for Nvidia is getting a little worse now, right? Things are starting to get more toward back to normal. They aren't back to normal yet, but they're starting to get there. So everything's getting a little worse. Bitcoin price, Bitcoin mining, it is important at the end of the day. Sometimes Nvidia hasn't wanted to acknowledge this, but it is important for them. And Bitcoin's obviously been falling in price since November. Bitcoin's down over 43%, and all cryptos pretty much have gotten absolutely destroyed during that amount of time, right? And so this is a story where everything is just getting a little worse for a company like Nvidia, okay? And essentially, that's how you get the stock price to just keep going down and down and down. It's not the end of the world for Nvidia. Their business is not stopping. Their future is still bright. But at the end of the day, the market's very caught up into short term. And what they see is everything just getting a little worse for Nvidia. And then they think about the next quarter, and what if it gets even a little more worse? What if those cloud numbers come down even more, right? For all the cloud players. What if GPU demand slows even a little more for the next quarter, right? What if crypto gets even worse, and so crypto mining is not as exciting, right? And so they look at a story that's just getting a little worse, and that's why they're sending the stock down so much, and that's why they keep selling these shares, because they're looking at a story that they're like, it was at a place where everything was getting better quarter after quarter after quarter. The demand for GPUs were insane, right? Especially when stimulus was out there. Cloud was on fire. The growth rates just kept getting better and better and better. And crypto was in a great place. And now all of a sudden over the past 6 months, all those things have started to get a little worse, okay? And so the market's like, we don't want you, okay? Recession. Let's talk about recession for a moment, okay? The Google Trends data for recession has gone pretty darn high recently, right? We're getting close to ranges we were back in kind of 2008, 2009 time. We're definitely nowhere close to March of 2020, but there's a lot of folks that are obviously very, very fearful of recession. Now, when folks are fearful of recession, they don't really want to buy stocks. That's just not how it works. When folks are scared that the economy is going to get worse, that unemployment could go up, things like that, people aren't as incentivized to be like, I got to go buy stocks. People are more incentivized to buy stocks when they feel comfortable, when they feel like the economy is in a good place, when they feel like the administration in office, for instance, has got their back or is going to do a good job or something like that. There's a lot of people that really look at like whoever's in office, and if they like the person that's in office and who's running the country, they're more incentivized to buy stocks. If they don't have trust in the person that's running the government at that time, meaning the president of the United States and their administration, and they don't think they're good for the economy, those people aren't as incentivized to buy stocks, okay? And that's absolutely something that plays out. And for right or for wrong, that is what it is. We got to just call it what it is. That's what people like to do, okay? And so when you have people scared about a recession, they're not going to be as incentivized to buy stocks and to buy the dip and those sorts of things. And that's just kind of what we've obviously, seen play out here, right? Now, the next thing I'm showing you here, this is the investor sentiment. And what this covers is how investors are feeling over the next 6 months of the stock market. Are they bullish? Are they neutral? Or are they bearish, okay? And what we're going to find is we're off the charts bearish right now, okay? Almost 60% of investors right now are bearish on the stock market for the next 6 months. That's awful, okay? Let me be very clear about that. That is awful. When you start talking about that many people being bearish on the market, I mean, who's out there to buy in that sort of scenario? Meanwhile, only 16.4% of investors are bullish on the stock market over the next 6 months. So, less than 1 out of 5 investors is bullish on the stock market over the next 6 months. I don't want to say you're in peak bearishness when you're in that sort of market, but gosh, that is pretty darn dramatic. Now, I saw this number, and I went ahead and I pulled up the historical sentiment, which gives you data all the way back to the 80s. Okay, this gives you data all the way back to the 80s on time periods when like the most people were bullish on the market or bearish on the market and those sorts of things. And so I pulled up that data, I downloaded the whole document and everything like that, and I was going back in history to try to find other time periods where, bearish sentiment, let's say, went over 60%. So it was higher than what it is now. Now, first off, I couldn't find very many time periods that we ever saw more than 60% of investors bearish, okay? So the period we're going through right now, this is one of the most bearish periods we've ever seen in history, okay? Let that sink in for a moment. Like I said, this data goes all the way back to the 1980s. This is one of the most bearish moments we're going through in the stock market that we've ever seen in history, okay? Not just like, in the past few years, in history, okay? So in 1990, I found that we had this one time period, basically October 19th, week ending 1990, which was, year after I was born, essentially, where 67% of investors for that given week actually were bearish on the stock market over the next 6 months. So there was a higher number, okay? The next time I could find was, 2008, okay? So what we're looking at here was October 9th, 2008. It's funny, Octobers keep coming up, huh? October 9th, 2008, 60.84%. So just a little bit more investors were bearish on the stock market over the next 6 months than basically right now. Now think about this for a moment, right? In fall of 2008, you had the entire financial system collapsing. Not on the verge of collapse, it was collapsing. You had some of the biggest investment banks, some of the biggest banks in the world going under, being sold for pennies, literally pennies on the dollar. It was the end of the world for the financial system, right? You had the credit markets completely dry up. And think about that for a moment. Right now, we're pretty much the equivalent amount of bearish on the market that we were in that moment of financial destruction. That's incredible to really think about. And anybody that knows anything about that time period, it's incredible to think that right now investors are basically as bearish back then. Think about this. During the financial collapse, this was the peak of the financial collapse, by the way, fall of 2008. There were still more investors that were bullish on the market during that time period than right now, while the whole financial system was collapsing beneath the surface and above the surface. There were still more investors that were bullish during that moment than there are right now. If that doesn't tell you we are in a messed up market right now, I don't know what else I could possibly show you. That's insane to think about, man. Share this with somebody. That is insane to think about. And make sure they watch this part of the video because that's just crazy, okay? March 5th, 2009, that week ending, we had the highest number I could ever find in history in terms of the amount of people bearish on the market. Over 70% of investors were bearish on the moment for that week ending there, okay? Over 70%. Now, this is going to be really funny, what I'm about to show you here, what happens after this moment, essentially. But also, think about this. Almost 19% were bullish, so there's more people were bullish at that time than right now, okay? But anyways, remember this number. This is the highest number I could ever find in history. 70% of people bearish on the market for the next 6 months. So what happened to the stock market over the next 6 months? Let's see. The NASDAQ over the next 6 months went up almost 39% over the next 6 months, guys. You can't make this stuff up. You can't make this stuff up. So everybody that was out there was like, oh yeah. Think about that. 70% of investors, the highest number ever, bearish for the next 6 months in the market. And then the NASDAQ goes up almost 40% the next 6 months. Oh man, if that's not telling about human psychology in the markets, I don't know what I could show you that is. That is incredible. Absolutely incredible to think about that, right, for a moment. Like, let that just sink in. The biggest number ever is bearish, and the stock market just goes beast mode. And people are like, what just happened? What just happened? We were all bearish, and now the market just goes absolute insane. Like, come on, man. But And that's the stock market for you. At the end of the day, it's like, everybody gets max bullish and stock market tanks. Everybody gets max bearish, and next thing you know, the stock market skyrockets. It's like, come on, man. Now, I went back to Rona time, right? Which Rona was scary. I mean, think about this for a moment. We were basically shutting down the entire economy. I think this was actually scarier than a normal recession, because a normal recession, at least business is still open. That was such a scary situation, because there we were in a moment in time where, first off, there was a moment when they were talking about 5 to 7% of the population would go 6 feet under. Okay, that was insane to think about. There was talk at that time like the economy was going to be closed for 3 years. That's how people were talking in February and March of 2020, that we were going to have the economy closed for 3 years. Right? That obviously did not happen, but that's what the talk was. Right? Max fear. You had Bill Ackman talking about, companies were going to zero, and for good reason. To be fair on that, I mean, at that time, a lot of these companies could have gone under if it wasn't for the Fed rescue and everything. A lot of these companies were going to go under. So for me, that was the most scary moment in stock market history, like where you really didn't know what was going to happen, right? And even during that time, we didn't have any time period in there where we were as bearish on the market as an investor group than right now, where the market's more bearish now, with almost 60% of folks bearish on the market, more bearish than even in 2020 at the peak Rona, guys. Where we peaked at was right here, 52.66%. That was May 7th, 2020. That was the peak for fear. And obviously the peak for the bottom of the market was right around here, 326 if I recall. Right around there's around where the market bottomed at, essentially. And that was 52% of investors were bearish on the market. So right now the market's more bearish than it was then. That's insane to think about, guys. Absolutely insane. So to recap this, you got people just getting obliterated with margin calls right now. Things are just getting a little worse for companies, and when things are just getting a little worse and a little worse, and it's for that almost every single company I could possibly keep track of, people get panicked when everything's just getting a little worse and a little worse, right? You have recession fears like crazy, and you have absolutely awful sentiment, among the worst we've ever seen in the history of the stock market right now. And that's how you get the NASDAQ to basically have tanked 22% in a snap of fingers, and you've gotten all this devastation. That's how it happens, and it happens quick, guys. Hope you enjoyed this video. As always, make sure you get yourself some free crypto from FTX US. Check out pinned comment down there, and make sure you use referral code Holy Smokas. 85% lower fees than competitors. Much love, and have a great day.